Median home sale prices appear to have come down in some cases across the Treasure Valley in the month of June. Yet, there's evidence that the median home sales price is actually on the rise, with some inventory evidence to back it up. With mortgage interest rates now on the way back up into the 7s and even higher, what will happen to the Boise, Idaho real estate market? Will it slow down or will it maintain its momentum? Well, that's what this video is here to do, is to educate you about what's happening in the Boise real estate market right here for the month of June of 2023. So you can make the best informed decision before you decide to make the move. So stick around for another episode of Mikey's Monthly Market Updates for June of 2023. I look forward to being your guide. Well, welcome back after that quick break, everybody. Mike Peters here with MPRE Residential, powered by NextHome Treasure Valley, and welcome to another episode of Mikey's Monthly Market Updates for June of 2023. And as mentioned earlier in this video, this is designed to go ahead and cover what has happened in the Treasure Valley real estate markets over the last month and how it may apply into your buying, selling, or even investing decisions. So you want to stick around to the end of this video to get the best strategies to be able to go ahead and tackle this market in today's format. Also, if you are looking to make a move right here to the Treasure Valley, please feel free to give me a call, shoot me a text, send me an email. We'd be more than happy to talk with you about the perfect scenario to go ahead and get you into the awesome place that you're looking for right here. And of course, if you are looking for more information before you make that move, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make that move. Also, please hit that subscribe button below, hit the notification bell so that you're constantly in tune with all the videos that I do come up with. And if you do like the content that's coming forward in this video, please give me a thumbs up. Please feel free to share it. More than happy to share the wealth and the knowledge with everyone around the Treasure Valley that's thinking about making a move right here. So now, if you're used to these videos or you're not, let's go ahead and let's dive into the Ada County market statistics and see what happened overall in June of 2023. But before we do, I just want to go ahead and make a disclaimer that this is covering the entire county as a whole. And of course, we know that real estate is more of a localized, local market kind of a deal. So if you want to know what's happening in specific markets, specific cities, specific areas, please feel free to reach out to me. Be more than happy to discuss those with you. So Ada County, let's go. All right, and according to the data, boom, the second month in a row, the median home sales price has been on the rise, which is now above the threshold that we had in the median home sales price in January of 2022, when everything started working its way up until the market correction hit in late May, early June, when we hit a peak in Ada County at 602,250. So since that benchmark in 2022, January, we are now up 0.46%. But in the grand scheme of things, we're still down 9.92% since the market correction, but you can see that that gap is really starting to narrow here in Ada County. And if we look at the 6-month overall breakdown, you can see that it has been on the rise. I mean, climbing from March of 2023 from 43,450 to 517,500, 532,500, 542,500, which puts us up 1.84% since last month. But the big question is, will this momentum continue to rock that direction? And really, the answer lies in the inventory. And of course, as I've mentioned over the last several Mikey's Monthly Market Updates, that really we have entered into a state of stability. And if we look back all the way at the inventory graph back in 2019, you could really see that the pendings and the available inventory was really kind of intermingling itself with the actual home sales right behind, which really kind of dictates the state of stability. And then, of course, we know that when COVID hit back around, was it April of 2020, we can see, boom, the inventory on the blue line went down to nothing. I mean, literally 6 days worth of inventory available in Ada County, which is just insane. And then the buyer's demand was right there with it. You can see it right there in the gray line and even the pending line, which is the orange line. And of course, you can see that going down like around towards January of 2021, but that was just because, well, there wasn't a lot of homes for sale anymore. And then, of course, we kind of rocked back up, and then we had our big gap, which led to the market correction where there was way more inventory available and buyers were just dropping off like it went out of style. And why were they dropping off? Because of mortgage interest rates. They kind of figured everything would be tackled, rates would go back down in the 3s and the 4s. Well, unfortunately, that didn't happen. But as we can see, the inventory did tilt its way back. And as I've been saying, you don't expect to see the big gap to where the market correction is going to continue forward here, at least in my honest opinion. But we can see this month that the inventory has ticked up a little bit. Well, of course, we do expect that in quarter three, rolling into the year, hot season of real estate. But don't expect it, again, to shoot out of control like you saw when the market correction continued. But we do see our pending lines at the tail end here in June of 2023 kind of ticking down a little bit, but we also see our sales coming up. Well, we knew that last month the pendings were up, so I did anticipate the sales to go with it. And so now that they're kind of ticking down, the gap might spread itself a little bit. But is it going to be such a huge gap like we had saw during the market correction? Do not bank on that. So what can we see? I would still anticipate more of a stabilization than possible rise in the median home sales price, but I'm definitely going to be looking at next month data to see 100% whether or not we are on the rise. But I'm kind of issuing a warning right now saying we might be trending that direction. So if you're on the fence about buying, may want to jump into the game. Now, of course, you might be saying to yourself, and I want to take a little break here, that mortgage interest rates are going to cool this all down. Well, we're going to get to that at the end of the video and see, has it? Has it really cooled this down? Well, the answer is going to surprise you. But just revisiting the graph real quick, of course, we got 1,326 available homes for sale out there in Ada County, and only 767 of them sold this month, which is definitely up from last month that you can see. So we're sitting at 1.72 months worth of inventory, which is actually down a tick from May, the previous month. But let's start breaking this down by specifics. Let's go ahead and take a look at existing inventory, and let's go ahead and take a look at new construction inventory in Ada County. And as we can see by this graph, there's 793 available homes for sale in existing home inventory, with 552 of them actually selling in the month of January or June of 2023. Why do I always want to say January? But here you can actually see the gap maybe starting to open itself up. We can see that existing home inventory is rising. And if we take a look at the orange line, it was kind of pacing it, and now it kind of went doink. Okay, a little bit. So there's not as many homes under contract. So what can we expect next month? We can expect the amount of solds to go down, and we'll just have to see where the pending numbers go. And that could also be giving a good indication on how many people are actually doing active mortgage applications right now, considering where mortgage interest rates are at. But if we take a look at the new construction inventory, we can see that we got 553 homes available for sale, 215 sold last month, which is just starting to tick up. But if you really kind of take a look at the solds, especially over since the beginning of this year, you can kind of see that they've been wonky, up and down, but more or less flatline. But we still have that intermingling between the pendings and the solds. And really, why is that? Is because the builders really retreated back to the pre-solds. They're not putting out a lot of spec or track homes available for just purchase right out the gate. And why do they do that? To be able to go ahead and protect their sales price. And on top of that, with this, if they're able to control that, then they're able to go ahead and pull a lot of the concessions that they were offering off the table. And really, that is happening. There are still builders out there, offering the concessions to be able to come in and buy their products. But it is slowing down, and is slowing down rapidly, especially as these builders are seeing the stabilization trend right here to the Treasure Valley. So now let's go ahead and let's break down the median actual home sales price versus average solds in both existing and new construction. And it was always a game that I like to say, who is the biggest loser? But right now, since we've had the stabilization, who is really kind of the biggest gainer? And really, let's take a look at the graphs. Even though they ticked down a bit since last month, which I anticipated that was going to happen in the last Mikey's monthly market updates, is it still ticking up? So let's take a look at this. We can see that we're sitting at 510, 575, which is down from the 517 that we had last month, which is actually putting us down 1.24%. And if we're looking at the market correction, when it was sitting at 586, 750, today's 510, 575, we can see that it's actually down 12.98%. So we still had that correction, but is it starting to tick its way back up? And then, of course, if we're looking, we did hit the mark, and we did surpass the mark last month of what we had in January of 2022. But now, since the beginning of, January of 2022, we're down 0.87% since that. But I still kind of see a ping-ponging. But this is a graph I want you to take a look at. This one right here. And if we go ahead and we take a look at what we had a few months back in March of 2023, as compared to what we got today. So we did jump up, okay, and then we came back down. But you can see by this arrow line, we are seeing ourselves and the evidence showing that it's starting to come back up. But will it stay that way? That is the big giant question. Are we returning to our 3 to 4% natural gains like we normally get around here in the Treasure Valley markets? Well, discussion will definitely be out on that one, but let's go ahead and let's see what happened in new construction. And by taking a look at this graph, we can see that this month we're sitting at 554,900, down for the 602,120 that we hit last month. So new construction really took a jump. And why? Because they're controlling their inventory. It is just the way that it is. But either way, we can see that it did dive back down. And since last month, it came down 7.84% since the 602,120. And if we're looking at the 690, which really kind of maintained itself even during the market correction until it finally started going down in about August of 2022, new construction is actually down 19.5% as a general whole in the county of Ada. And if we're looking at what happened since the beginning of January 2022, when it was sitting at 588,945 down to the 554,900, we are actually down 5.78%. But again, let's take a look at this graph and let's see if we're heading up. And the answer to that question is yes, we are. You can see, again, right back here from April of 2023 to today, June of 2023. Take a look at our line. It is just slowly trickling up. So is there evidence that the median home sales price is on the rise in Ada County in both existing and new construction homes? Yes. But is inventory also on the rise and pendings kind of coming down a bit to maybe create a gap to where it will either A, stabilize or, well, actually continue to stabilize, in my opinion? That evidence is also there. So I'm really on the fence. I'm looking forward to next month's data to see what's going on, but median home sales prices might be finally on a stable path upwards. Looking at days on market in Ada County, and per the season, because we are in hot season in real estate, we are down to 30 days of the average time it takes to go ahead and sell a home here in Ada County. And that is really shot down. Back just a few months ago, we were really at 74 days. Then we hit 69, 53, 33, now down to 30. And I anticipate it, for the next couple of months, maybe to go down a little bit more because the buyer's demand is still here. It hasn't gone anywhere. We'll just have to see how the mortgage interest rates really kind of play this one out. But I just, again, don't see it affecting, even when it was in the high sixes, low sevens, just hovering around there. There are still a lot of mortgage applications going on, which we'll get to later on in this video. And then lastly, this is another telltale sign of whether or not mortgage interest rates are really kind of killing sales transactions out there. And we can see that our cancels really have not gone on the way up. So buyers are still coming in to be able to qualify for the house that they're looking for and finish the transaction. And there's not a lot of sellers that are taking, their houses off the market just to take it off the market or test the waters. Again, I've said this, multiple times during prior videos too, because of where interest rates are at and what people really lock them into. It's time. For sellers, it's the time of necessity. You're really only going to be moving if it's going to be for like family reasons, job reasons, etc., or just an absolute need to have to go ahead and do so. But most people and most sellers right now are just comfortable sitting into their rates and are not going to go anywhere if they don't have to. But again, going back to the graph, we can see that cancels have been there. So it's still showing, a healthy market that people are actually completing their transactions. And even the expireds, they kind of ticked up, a little bit this month, but they're always remaining low. And those are generally like the holdouts, the sellers that just want their price until their contract actually expires. So all in all, if you have any further questions about Ada County, please feel free to reach out to me, give me a call, shoot me a text, send me an email. We'll be more than happy to answer any questions. If you have any cities within Ada County on your target plate or would like to know more refined data about particular cities or local areas. And hey, before we go on, look at that, a subscribe button. Please hit the subscribe button, hit the notification bell so that you're constantly in tune with these videos in the future as they pop up. All right, Canyon County, it's your turn. Let's go ahead and see what happened in Canyon County. And if we take a look here, yeah, we dipped down a little bit in the median home sales price, as I anticipated it was going to do. I just said it was a one-off fluke of how that ended up happening, But again, are we still on the rise? That's what we really have to break down. But taking a look at this, we're sitting at $405,000 at the median home sold price that happened in Canyon County as a whole, and which is actually, well, we'll get to that here in a second. But if we're looking at the 476,500 since the market correction began, we're down 15% since that. And if we're looking since the beginning of 2022, when we hit 424,900 down to the 405 that we've got, we're down 4.68% since then. And now looking at the 6-month breakdown, as you can see, as I mentioned, it was ping pong. We were stabilized. So you can see the stabilization there from 395, 445, 389, 945. Let's just skip ahead. 389, 990, 415. We did jump up the last month, but now down to the back to the 405. So if we're looking at what happened between last month, we have been down 2.4%. But let's take a look at the grand scheme in the next graph. Are we really down or are we starting to tick up? And as you can see, by looking back at even April of 2023, when we're sitting at 389, 990, we jumped up, but now we're at the 405. And if we take a look at the line, it's slowly ticking its way up. And again, as I mentioned in Ada County, I'm really interested to see what happens in the numbers next month. So please stay tuned to Mikey's monthly market updates so you can see. But I'm starting to think that the Treasure Valley might be on its slow, normal rise up in median home sales price. And will it stay that way? Will it kind of just start trickling its way up? Or is there evidence in the inventory that it's starting to widen up again between the available inventory and the active buyers out here? Well, let's go ahead. Let's take a look at the inventory. Right now, we're sitting at 722 homes, which 415 of those sold. And if we're taking a look at the pendings and the actual available inventory, we're seeing it's still intermingling here. So we're not seeing the total active inventory really kind of narrowing the gap between what was happening with the buyer's demand. It's really starting to look like what was happening in 2019, like I've mentioned before in prior videos, when we did really have a stabilization and we did have that slight tick up. So have we returned back to normal in Canyon County? We very well might have. And so we are sitting at 1.73 months worth of available inventory in Canyon County, which is actually just a tick up from what we had the previous month. But I do expect this stabilization and maybe even the slow call trend to continue right here in Canyon County. Breaking it down by inventory of existing homes as compared to new construction. If you're looking at the existing homes, well, that's starting to pull away a bit. Same pattern as what was happening in Ada County. We can see we're sitting at 415 available homes with only 261 that actually sold. And we've noticed by the pending line over the last month, it's been just kind of hovering. So I've anticipated, the buyer's demand and the actual solds to be on the way up. But again, could it possibly, now that we're seeing the pendings go down, get to the gap to the point to where it restabilizes something or maybe even brings value down a little bit? Well, again, that's going to depend on mortgage interest rates and how many people jump out. Stick around to the end of this video to see if mortgage applications have been just dying off. You're going to be shocked to see the answer to that. But I still anticipate a stabilization trend to happen even in existing homes. And in new construction in Canyon County, it is quite the opposite, as we can see. We only have 377 active homes for sale in Canyon County, 154 of them selling. But look at that pending line. The pending line is definitely jumping and superseding that. So what can we anticipate? The inventory to continue to come down in Canyon. And why? Because again, they control their inventory. They retreated back to the pre-solds. They're trying to control their prices. Take any concessions that they had on the board off and make it an even playing field for them business-wise. So you really can't blame them all that much. They are in business. But either way, when it comes to new construction, it's looking very, very healthy-wise in terms of whether or not we can see the median home price continue to be on the rise, which honestly, I see that definitely in new construction. And really, here's the proof in the pudding. But let's go ahead and let's start off with existing homes first. As we can see, we've been slowly trickling up since January of 2023, and we did hit 400,000 last month, but we did come down 10,000, which brought us down since last month 2.5%. But again, is it coming down, or is it going to ping pong? Are we going to stabilize? What's the deal? Let's go ahead and take a look at this graph and take a look at the lines. And as we can see, if we're taking a look back of April of 2023 to today, we can see that we are slowly climbing. So have we returned back to an actual stable market at about 3-4% gains in Canyon County? Well, there's a lot of evidence of that there. Okay, and even in Ada County, but we're just gonna have to continue to wait and see. But new construction, and I actually anticipate new construction to kind of go on its way up. If we look at the average sold, this is the one I want to look at here. When it comes to the orange line, you can see it made a sharp jump. But we'll just have to continue to watch the data. But we were sitting at 433,092, and now we're down to the 429,240 that we had since last month, which puts us down 0.88%. Not that much of a give. But if we're looking at what we had since the market correction at 549 to today's 429,240, we're down 21.8%, which is just whopping huge when it comes to new construction here in Canyon County. But if we're looking at the 465 that we had since January of 2022, when value started to go its way up, we are starting to kind of narrow that gap. But we are only down 7.7% in new construction in Canyon County since January of 2022. But let's go ahead and let's take a look at this graph. Again, are we showing signs that it's just on the way up? Well, taking a look at this back to April of 2023, boom, we could see it is slowly climbing. I know we had that jump last month, but it came back down. But the line is pitching and showing you that the values are starting to go up. Now, with new construction, I'm really curious to kind of see what the data brings out, but I expect the new construction median home sales price to rise in Canyon County. Why? Because it's a lot more popular and they're not building as many homes to meet the demand. Days on market in Canyon County, well, it actually ticked up a little bit. For the average time it goes ahead and takes for a home to sell countywide. We're sitting at 47 days, a tick up from 43. Now, is that really kind of indicating that the buyer's demand is slowing down in Canyon County as say to Ada County? Really, no, I'm not going to go ahead and say that. Of course, Ada County is a little bit more popular. It's a little bit more closer to business hubs, etc., like that, more popular for people to go to. And if you're thinking about property taxes, Canyon County is just a little bit higher than what you're going to go ahead and get in Ada County. But I do anticipate this number to continue to come down since we are in hot season. But either way, we'll keep our eye on that data. But just know that the buyers here is still indicating that it is a good market. And lastly, looking at the canceled and expireds, really has the interest rates really affected, enough for the cancels just to jump up, which is another tall tale sign, that things are just getting harder on everybody, out here. Well, looking at this, you can see the cancels are actually going down. So it's kind of indicating to me that the buyers that are coming out there are a lot more ready, even considering the high interest rates that are going on, and the transactions are able to go through. And there's not a lot of the sellers out there. The sellers that are out there are determined to sell because they have to sell because of maybe family, they have a job, etc. Something changed out of necessity in order for them to be able to go ahead and move, which is really kind of where it's at. Because like I said, in Ada County, really, if you're moving right now, you're, again, having to do it out of necessity because you really don't want to lose that 3 or 4% rate that you might have. I mean, really, why would you? You wouldn't, unless you really had to make the move. But if we're looking at the expireds, we can see that they ticked up a little bit, and maybe it's just because we had some holdouts in the sellers being able to come down in their price to be able to sell their house. They just said, I want this to be the way that it is. But either way, from this data in Canyon County, things are looking quite healthy. And can we anticipate them to start maybe creeping up at a normal level? Well, we maybe could. We'll just have to continue to pay attention and see what happens with the data. And of course, if you have any further questions about Canyon County as a whole, any of this data, cities within there, local markets within the cities, please feel free to reach out to me. We'd be more than happy to be able to come up with a perfect game plan to go ahead and get you right here to Canyon County. Now let's go ahead and let's break down what's happening with mortgage interest rates and really what are the big elephants out there that are still keeping this high in the mortgage interest rates. And is there anything on the horizon that could really start shaking up our market big time? So lately, mortgage interest rates are where they're at because of just the absolute defensiveness that's happening in the Treasury markets. It started off a few weeks back when the Fed came out with their new SEP report. If you want to see what that was all about, please click on the link above, and that way you can go ahead and get in tune and see what happened with that. But this week's data has been really sending a crippling blow to the Treasury markets across the board. And why? Because now they're really even more panicked that the Fed is going to get aggressive and follow the SEP that they came out with a couple of weeks ago. As you can see by this data, the culprits really come down to jobs. When the ADP employment report came out, it shot way up across the median forecast, which sent ripples down the waves of the Treasury markets. Plus, on top of that, you add the ISM Services Index, which shot up too, which is saying that the services industries here in the United States are doing healthy and they are fine. And these are things the Fed does not want to see in order to tame inflation, even though inflation numbers have been coming down in both the CPI and the PCE reports. But as a result, the markets are getting defensive, and because of that, they're selling off their bonds. And of course, when they start selling off their bonds, what are they doing? It's raising the yield. And when the yield goes up, what do we know happens with that? That's right, mortgage interest rates follow right with it, especially the 10-year Treasury yield or the 10-year Treasury note. So just to recap what has been happening of late, the markets have been definitely on the defense. And they've been on the defense because of what the Fed said a couple of weeks ago. Please click on that video to see what happened. And then on top of that, the data is coming out stronger than anybody was hoping and anticipating for, which is just going to signal the Fed to get more aggressive at the next meeting with the federal funds rate. Now, as I've mentioned, and I just want to recap, does the federal funds rate actually set the bar for mortgage interest rates? No, it does not, but it does have a ripple effect down to the 10-year Treasury note. What generally happens is that when the federal funds rate does go up, people get generally nervous, again, on the defense, and they'll go ahead and they'll sell their bonds. And normally to be able to sell their bonds, if they're at a particular coupon rate, they'll have to take a slight loss. They'll have to take a loss at it. And when they take a loss at it, the Treasury yield is going to go up. And when the Treasury yield goes up, again, mortgage interest rates follow suit. Even though not posted today, the non-farm payrolls is coming out. And it is coming out sometime today. And when that does hit, also you can expect maybe the data to come in a lot stronger than we were hoping for, and the markets to get even more on the defense. So can we see the rates go into the sevens or continue up into the sevens and even reach higher? Yes, we could. And what could that do to the housing markets across the US? It could slow them down. But has it? Let's go ahead and let's take a look at that data. As you can see by this graph, mortgage applications have relatively stayed flat. They have not really dived down, and this is on a grand scale of the US. It's not something that's just really coming across the Boise area in itself. But either way, it's showing the precedence that even though mortgage interest rates are high, the buyers are still out there. And why are they out there? Because they need a home. And really what has the reality set in is that the 3 and 4% are not coming back, and they're not going to be coming back anytime soon. And really, could this be the new norm for mortgage interest rates and housing as a whole? It very well could be. And with housing prices maybe back on the rise, it could be that time that if you're a buyer and you're sitting on the fence, you might want to get off that fence and be able to get the house of your dreams while you can. And while housing has hit its basic rock bottom since the market correction. So beyond the data and what the Fed could possibly do at the next Fed meeting, what else is out there to be able to really kind of rock and maybe possibly hurt the US as a whole coming up in the future? Well, I've always said in my prior videos that losing the world reserve currency status could be the biggest elephant ever. But the Chinese yuan just took a big hit. And that is definitely what the US did want to see in order to be able to more or less affirm their status. But does it mean that the BRICS nations are done, and that the BRICS nations won't continue to push forward and things will recover on that end? It very well could. So is it still in the possibility that we could lose our status as a world reserve currency and everything becomes super hard, almost impossible on everyday Americans? It could. So it's something still to pay attention to. But in terms of anything else, beyond just the data and what the Fed is going to react to the data with the federal funds rate, that is really the biggest elephant right now that is setting the benchmark to mortgage interest rates. And if mortgage interest rates continue to climb, expect it to slow down the US housing markets. And at that point, we'll just have to see what happens. It will definitely come down to how much inventory returns. And right now, all the data is showing that the inventory is going to stay at a bar to more or less a stabilization level. But please subscribe to this channel, hit the notification bell so that you're constantly in tune with this information, because I do pay attention to this all the time so I can best advise my clients on the best action to be able to buy, sell, or invest right here in the Treasure Valley. So now let's go ahead and let's get into the best strategies in order to be able to buy, sell, invest right here in the Treasure Valley to be able to get here to the greater Boise, Idaho area. All right, buyers, let's go ahead and start off with you. What really is the best strategy right now? You might be saying, well, Mike, these mortgage interest rates are absolutely slaughtering me. And they very well could be. And do we see the mortgage interest rates possibly coming down to the point to where the treasury markets stop their defensive positions? Well, unfortunately, all the data right now is just leaning towards them being more defensive, and more defensive. And even though they are on the defensive side, the data is still coming in and rocking that, making them even more defensive. And when that happens, we can expect mortgage interest rates to climb or stay relatively where they're at, which they have been. They were really kind of hovering around the high sixes. Now they're into the sevens. And could they possibly stay in the sevens until the next Fed meeting, until the next CPI, PCE reports? It very well could. But the whammy is here, and if I'm correct, if home values, the median sales price is on the rise, okay, at a slow trickle, then it can really put a little bit more pressure on you in order to be able to qualify and get the home of your dreams. So right now, you may be asking yourself, well, is this a good time to buy with what is going on with mortgage interest rates? Well, if home values are on the way up, mortgage interest rates are on the way up, it's definitely not where you want to be. But if you're waiting for them to just all of a sudden come crashing back down, either home values or mortgage interest rates, I wouldn't bank on that. One thing that definitely does seem clear is that home values will be on a slight rise, and we'll just have to continue to monitor the data, or it's just going to continue its stabilization pattern. So if it continues a stabilization pattern, you might more or less want to wait and see what happens with rates and if they come down a little bit, especially if you're on the fence and you're very mortgage interest rate sensitive, which the Fed knows that the housing markets are. But if home values are going to be on the rise, a definite swing over to the seller's market, which we have definitely seen here in the Treasure Valley with homes that are $500,000 and under. Definitely we've seen the dogfights come back with multiple offer situations. And we know how that can turn out for you in terms of the home value that you're going to go ahead and purchase at. So now may be the time for you to go ahead and jump in there and find the home of your dreams. And then, of course, we do know that mortgage interest rates will eventually come down as inflation gets a little bit more under control, as these numbers come in better. And when the mortgage interest rates come down, you can go ahead and refinance. So buyers, if you are looking to come out here and make a move to the greater Boise, Idaho area, better known as the Treasure Valley, please feel free to give me a call, shoot me a text, send me an email. Let's go ahead and discuss these big ticket items so that we can get you right here and get you the home of your dreams. And of course, if you'd like to know more about our area before you decide to make the move, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. All right, sellers, it's your turn. And I'm probably guessing that you are probably one of the sellers that might be saying, well, why do I need to sell when I've got such a good interest rate? Well, that's the key question. Why do you? And really, it's ushered in the time, and I've said this over, recent updates, that it's really ushered in the time of selling out of necessity. Either you're selling because of your job, relocation, or maybe it's family or something big ticket item to where you're going to go ahead and make the move. But if you're comfortable and you're like, hey, I don't need to go anywhere, and I've got this really awesome interest rate, well, that totally makes sense. Why would you get up and move? And that's where the majority of the sellers are right now nationwide, and especially here in the Treasure Valley, which is going to keep the inventory levels at bay and more of that stabilization aspect that I've been talking about. But if you've been on the fence because you want to recover, some of that money that you took in the hit in the market correction, well, that very well could be starting to come to fruition. It could be starting to come up and narrow the gap for the property values that you were looking for. But just remember, if that's what you're waiting for, that when property values go up nationwide, say, well, if they're going up, well, you're also going to spend more as you're selling for more. And also the opposite, when prices are coming down, you're going to spend a little bit less on the house. But of course, it's those mortgage interest rates. That's the big key. But the key here is that if you are going to sell your house, it is definitely time to appropriately price your home in today's market in order to be competitive. We are still a little bit on the buyer's market side of things to where buyers can kind of push you around a little bit, maybe give you to cough up concessions or maybe even flex on your price. But those times are rapidly going away and more swinging over to the seller's direction of things, especially if you're $500,000 and under here in the Treasure Valley. But does that still mean that you have all the power right now to be able to kind of push around a buyer? we are not there yet. So appropriately, properly pricing your house in today's market is definitely the key in order to be competitive and sell. So if you are looking to sell your house for the most money possible and sell it in the quickest time possible, please feel free to reach out to me. Give me a call, shoot me a text, send me an email. We'll be more than happy to come on over, set up an appointment for about 15-30 minutes and discuss the best strategies in order to sell your home in today's market. So sellers, I look forward to hearing from you. All right, investors, it's your turn. Well, investors, this is definitely interesting because we are kind of seeing that maybe the median home sales price is ticking up on the way back. And if you are trying to get a mortgage to be able to go ahead and get that secondary property, well, of course, we know that rates are high. And if it is a mortgage on a secondary property, you can guarantee that you're going to spend more than what the average everyday rate is at. So the key is for investors, especially if you're trying to get a mortgage for a secondary house, would probably be to wait and see what happens with the mortgage interest rates and if they come back down, especially if you're on the fence about it. But again, you can also purchase your property if the home sale value is going to be on the way up, and you'll be able to go ahead and refinance a little bit later. So it's really important to take a look at how much you're putting down and the capitalization rate of the property that you're looking at. But also, as we've noticed, and even here in the Treasure Valley, the rents have been down, or they've been coming down, and that is what the Fed does want to see. If you're looking at the FHFA or the OERs, you'll notice that the average rents are coming down. So can you really kind of capitalize on the investment that you go into? Again, it's just really, really important to pay attention to the capitalization rate and see if it makes sense, especially how many years it might take to be able to put you in the black, because most of the time, the first few years, you're probably going to be in the negative a little bit on your secondary property, again, depending on how much you put down. But the quicker you can get into the black and turn it into a profit, the better. And of course, if you're just coming out here to purchase all in cash for a secondary property, well, cash is king. We know that. And if you're paying off the whole thing, then your capitalization rate is going to be the best, for you don't have a mortgage. So if you are looking to see what your capitalization rate could be on a potential secondary home that you are looking at, please give me a call. Be more than happy to run those numbers for you based upon your situation and let you know what the capitalization is at and whether or not, and I will give the advice, whether it could be a good time to invest in a secondary property right here in the Treasure Valley. All right, and lastly, renters, it's your turn. And the same thing I say every single time in Mikey's monthly market updates, you are paying 100% mortgage interest rates. And why? Because you're paying your landlord in order to be able to live in the house. So especially if home values are on the rise and they are going to start trickling up, that is equity returning back to you. So if you are looking to set the foundation for a potential home purchase coming up in the future, I know great loan officers all over the Treasure Valley that'd be willing to sit down, talk with you, and come up with the best game plan and best strategy in order to get you in the home of your dreams. Stop paying your landlord. Pay yourself. And having the home asset could be a valuable tool, especially if we did lose our status as a world reserve currency. So renters, are mortgage interest rates on the higher end right now? Yes, they are. But will they eventually come down? I'm anticipating so. And if that is the case, you can go ahead and refinance a little bit later to get yourself a better mortgage payment. And with what you're normally paying in rents, mortgages aren't that far off, or maybe in most cases, they're even cheaper. So feel free to give me a call, shoot me a text, send me an email. We'll be more than happy to set you in the right direction to be able to start laying the foundation for that home purchase up in the future. Renters, I look forward to hearing from you. Well, as always, everybody, thank you so much for taking the time out of your day to watch these, incredibly long videos that I come up with when it's the Mikey's monthly market updates. But again, what I'm trying to do is go ahead and put in the grand picture of what is happening on a county basis in a very broad general sense. What is happening in the real estate markets right here in the Treasure Valley, greater Boise, Idaho area. And of course, if you are looking to move right here, please feel free to give me a call, shoot me a text, send me an email. We'll be more than happy to sit down with you and discuss the best game plan to go ahead and get you right here to the Treasure Valley, or we can even do that consultation over the phone. But before you go, if you did like this content and you want to stay in tune with what's going on, please hit that subscribe button below, hit the notification bell so that you're constantly in tune with the videos that I do come up with, and please give me a thumbs up if you like this content. share it with somebody else too that could benefit from this video. And of course, if you're looking to make the move in to the Treasure Valley from out of state, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Also, please feel free to comment below. Would love to hear your thoughts on what you think is really going to happen in the U.S. housing market, what could be happening with the Fed, what's going to happen with mortgage interest rates. Would really love to hear your thoughts. So I look forward to hearing from you with that. And of course, as usual, thank you so much again for watching. God bless. Until the day we speak, I look forward to the day I call you my neighbor. Till the next video. Bye-bye.